Hello and welcome back to Alephium Aware episode 6. Just a heads up, this video is going to be a bit shorter than usual because I'm absolutely almost certain that it's going to rain on me. It has been a beautiful morning, not a cloud in the sky, and just as I was getting ready to come out and record, this massive black grey, monster of a storm came out of nowhere and is rapidly approaching. If you don't know already, I'm Pepper, head of marketing at Alephium, and this is Alephium Aware, where I take two stories from the world of crypto, tie them together, and find a way to prove or suggest from these stories that Alephium is inevitable. Okay, let's go. BNY Mellon, one of the world's oldest and largest custody banks. Apparently it manages about $59 trillion in assets. I don't know if that's 100% correct, but that's what my research told me. It has dabbled in blockchain stuff over the years. You can go and find old articles about what it's done, experiments, etc. But right now it is actually moving parts of the business properly on chain, and I think this is very interesting. It's the transfer agency and fund record keeping operations. These two things are being moved onto the blockchain. Now, I wasn't 100% sure what exactly those things do, so I went and looked it up to help you guys too. So transfer agency is the infrastructure behind who owns what, and fund record keeping is the audit trail behind every investment made in the TradFi world. BNY Mellon makes a decision like this with 59 trillion in assets. Then you're probably thinking, who is impacted by it? Well, I would suggest millions of people, of course, but probably the biggest company or entity that's impacted by it surely would be BlackRock, who have 15 trillion in assets under management. This is a huge amount of money we're talking about, and to see these companies finally recognize 100% that the blockchain is a better way to do things, really good. Roughly the same time that BNY Mellon announced this news, Robinhood released their Q2 report, and I think it's really interesting. I took a quick look in there, and pretty much everything is going up, which good news for those who are involved in Robinhood. So we've got equity trading volumes are up, options are up, crypto trading volumes of course are up because Robinhood chain's pretty new and done very well so far. Retirement accounts are also growing, and assets under custody are growing, despite what many people think, because Robinhood has the Robinhood chain and it's been a popular centralized exchange for buying and selling assets. Many people think of it as a crypto company. It's not a crypto company, it's actually a retail financial platform. It just happens to have a lot of users in the crypto space. What it's doing this year that it didn't necessarily do before, it's building and developing the infrastructure for more on-chain activity, specifically for real-world asset tokenization, and that's a good thing. That's more people in the space, more liquidity. I'm all for it. And another small bit of news just to squeeze in on this story one. It's actually from Morpho, and it was Paul Frambert who basically announced that they have their first major institutional partnership in Hong Kong, and that's with Hashkey. Their focus is to support on-chain credit for regulated players, so bigger businesses, entities, stuff like that. Still no rain, but it's completely grey ahead of me. I think it's going to rain any moment, and if it does, I'm just going to crack on and continue with this video to the end. Okay, so BNY Mellon, Robinhood, Morpho, Hashkey, they all fall under the same kind of umbrella. For that reason, they signal the same thing. Poor financial infrastructure is leaving these centralized siloed databases that the TradFi world has used for decades, and it's setting its course for public blockchains. New ideas, it has new visions, and I believe that it finally recognizes that the blockchain can do the things they want to do better. This is the real deal. We're here. We have arrived at the point that people thought would never come a long time ago. At least when I got into crypto, people never thought we'd see this level of institutional adoption. Here we are. It's happening. So now the question, before I move on to the second story, why do I think this is a strong signal for Alephium? Well, you've probably figured it out by now, but institutions and regulated entities, they're not looking for high throughput blockchains. if they were, I think they'd probably all be heading over to, Solana and other super fast chains, but they probably know already that those chains don't offer the level of security that they need to do the things that they want to do. Now, I was going to go into the why. Why is Alephium good? I think you've heard me talk about it so many times, you're probably bored of it by now. But if you are new here, the very short version is it's a combination of proof of work, UTXO style asset ownership, SUTXO smart contracts. These three things combined basically match those three things that I believe these TradFi companies are looking for on chain. I believe that Alephium was built from day one for exactly this kind of institutional grade settlement, and that's why I'd love to see some of these institutions consider building or integrating Alephium for what they're doing now for these transitions. Okay, now the second story is happening inside DeFi 2, and it involves two very big characters from the crypto world. Let's start with Stani Kulachov, who I've had the pleasure to meet a few times at conferences over the years. He is the founder of none other than Aave. They announced recently, within the last few weeks, that they would be deprecating more than 50 low adoption assets and winding down deployment on several chains from Aave. The numbers were crunched here, and about roughly $100 million in supply is affected. There's balance happening here, right? They remove the stuff that's not working and they improve the stuff that is working. That's just good logical business, right? Now, at the same time, Paul Frambot, who I mentioned earlier, again, this is the guy from Morpho. He's been building something that they're calling Morpho Midnight. It's basically fixed rate, fixed term lending and zero coupon primitives. And he said that the idea behind this was to build pricing trust. Now, I think that's really interesting. His kind of ethos on this is that the next chapter of DeFi will not be about listing as much as you can list, listing everything and trying to grow at any cost. If you try and please everyone, you end up pleasing no one, right? You become far too generic. You should try and be more specialist. What they signal is maturation in DeFi. We're going to see something more serious, better risk frameworks, more sustainable economics, which Alephium is obviously trying to do as well, and credit primitives, which is going to be really interesting. All of that maturation, I believe, is a tailwind for Alephium. Let me explain why. Immature DeFi has thrived for a long time on these kind of high throughput environments, these blockchains that traded speed for security. You know who I'm talking about. But mature DeFi cannot do that. It just simply cannot. It needs a base layer where the smart contracts are impossible to exploit, would be perfect, but extremely difficult is more realistic. I don't want to say impossible in this space because you never know what's possible, and with AI helping the best hackers in the world, we don't know if impossible even exists. They need chains where security is grounded in work, proof of work. No, Alephium's architecture was built for that higher standard that these institutions are now looking for. The great signal here is that the movement from grow at any cost and take risks to only sustainable low risk growth makes a kind of secure and expressive proof of work chain like Alephium look inevitable. Anyway, that's all from me. Shorter video this time. The sun is back out, but it's mixed in with the grey clouds, and I'm very lucky I didn't get rained on. I may get rained on the way home, but who knows. I'm gonna go grab a coffee, get back to my desk, edit this video, work on some content for Alephium, and just try and help the world see that Alephium is inevitable. Thank you for watching. This is Alephium Aware. See you next time.